Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. As we look back on yesterday, we saw some wild swings. We came in weaker in the market early on in the session. Overnight session was even weaker, but it just continued to rebound as the results from Georgia came in. It became very clear by mid-session there was going to be a bias to the Democrats, and this set up for a big rally because now it's all about stimulus. And I talked about this in the live stream yesterday in detail. If you didn't get a chance to watch that, watch the replay at least the first 35 minutes or so, as I went through a lot of details and set up some things that I believe we're going to need to watch as this year unfolds. But for sure, what we're going to see is more stimulus, which equals universal income. So a lot of these displaced people in the economy are going to continue to see free money come. You couldn't get anything passed over the past several months, but now you're going to see everything get passed. There's going to be free stuff flowing everywhere. You'll see what I'm talking about very soon. Now, the unrest that we saw in D.C. today didn't affect the markets again. We continue to see nothing affect the markets. I talked about this in the live stream yesterday. I believe the same players that came in right after the presidential elections, where we saw 5 gaps in a row, have shown up again, bidding the market up. I don't know who the players are, but they seem to be fearless again, and we're already seeing overnight in the futures another 22 handles higher. The markets were pretty sloppy, especially in the NASDAQ yesterday, and I'll go through all the details here in a few minutes in the technical section. But we're continuing to see this crazy volatility, and we're also continuing to see the bias to the small caps and the mid caps. I went through a lot of details in that live stream, so tonight's video is going to be somewhat condensed. I'll do a bigger video tomorrow night as we set up the end of the week. But as we go into today, we also have the claims numbers coming out. They're expected to show 750,000. We saw ADP numbers come in and miss completely on the downside. No one seemed to care about that because of this relative viewpoint that we're going to see plenty of stimulus going forward. The other thing that will be out today will be the continuing claims. It came in at 5.2 million last week. I'm expecting to see this actually uptick this week. I was looking for it to come in under 5 million, but I think that this could actually be an uptick this week. And all the metrics on the economy starting to fail substantially, especially since a lot of the forbearance and other programs have ended, and now they have to be reinstituted. But the other thing to remember is none of these new things in the government and monies that are coming out are going to come out until probably the second quarter. We're going to have, for the most part, status quo as we come into February and March. There will be some things come on, but no real big changes I don't expect anyway until after March or so. And when that happens, then we could see the market start to accelerate again, and there just doesn't seem to be any top in this market right now. As I talked about in the live stream yesterday, my expectations are for at least a 13 to about a 20+% gain for this year, which puts the S&P between 4,200 and 4,900. So we'll see how this all unfolds, but it does look like this market will extend itself as the weeks and months unfold. Let's go ahead and take a look at the charts, see what they're telling us for Thursday. As I go through the WaveTech Database, looking through the Portfolio Expert internal web browser, we're looking at a number of things that occurred overnight. We did get about 1,200 new buy signals, but there were also 700 sell signals. So we had a slight bullish ratio, neutral on daily 3-2 bullish on daily 1.2, which is the more aggressive model. So the percent bullish stayed above the 62% level that I've been discussing with you over the last several days. It's at 66.78%, and this is significant, and I believe as long as we stay above 62%, we're going to be able to see this thing move forward and the markets continue to print higher numbers. On the intermediate basis, we have 78% of all of the stocks in our database. Otherwise, let's bring that up. 12,768 symbols of our 16,391 symbols are actually bullish or have uptrends on an intermediate basis. So everything is very bullish. There's no signs of any top. As I mentioned, we're somewhat overextended from a percent bullish standpoint, but when we look at the stats on the positions, they tell a slightly different story. Right now, the optimized weekly shows that the average model holds for 201 trading days, and right now our current average duration fulfilled is about 31% of that. So we have about 70 days long of the 201. So there's still a lot of forward-looking markets ahead for the database, and I've talked about this in detail over the past several weeks. So looking forward, there's still positive trends, plenty of them, 12,768 on the intermediate basis and a little bit less on a short-term basis. Everything continues to be looking forward in a very positive mode from the database viewpoint. As we look at the S&P futures, in last night's review, we were negative overnight. I've mentioned in last night's video that oftentimes we see these negative reactions to the results coming out of the election only to see the market rebound. Well, it did that in spades yesterday. We did see the market rebound, start to take out some of the key levels. In fact, we traded up to an R3 level yesterday on the futures. R3 was 3773.25, and the high was 3774.75, so almost the exact hit. We did back off of that level a bit to close at 3740. We did close in the upper end of the range, and we're seeing some follow-through overnight. The PPMs are starting to turn up again. PPM1 is now a positive 0.22, and they've all turned back up and trying to move higher. One of the things that I see happening here, while the markets did make a big about face here since Monday's retracement, we're seeing quite a bit of resistance that's building overhead. For today, R2 is 37.85. The high's been 37.70. We've traded just above R1. So S1, 37.19. The possibility of 37.85 would be the ultimate range. Let's go to the SPX and take a look at the cash markets. They have a similar story, but we're seeing some movement on the upside to the market grid. If we look at today's market grid, expectations R2 37.86. We went out at 37.48. So R1 37.66, R2 37.86. We're likely to see at least an R1 today at 37.66 and a possibility going to R2. S1 37.30 is likely to be the low of this pattern. From a weekly standpoint, we've seen a highly volatile range, but we have seen a contraction of the volatility on a weekly basis. So R2 37.88 is a key number. That yesterday's high was 37.83, so we almost printed an R2 weekly. There are some numbers above here, 38.05 to 38.20 on a weekly basis. On the downside, on Monday, we were able to print through the STX number, 36.91. We printed all the way down to 36.92. So we did see a penetration, but we also came very close to that 10-week moving average that I was talking about early in the week, 36.56. That was the key support, and I expected that. That's exactly what I was talking about on Monday. If we did get down to the 10-week moving average, that we would find substantial support at that level. As I mentioned in the opening comments, we saw a very sloppy day in the NASDAQ, and the NASDAQ continued to trade in this very sloppy range. We were able to print up just about to the R1 level, which was 12,851. The high was 12,844, so we came short of that. And on the downside, we printed all was even below the STX number as we look at that number, which was 12,548. So we did see substantial downside, and most of that came early in the session. We saw a rally from a negative almost 200 to a plus 50, 60, and then traded back to close lower on the session, about 75 handles roughly. And now overnight, we're seeing that being reversed again. The NASDAQ is up 85, or up 0.67% right now, and we're seeing it sandwiched between the 10-day and 21-day moving average, 12,756, 12,657. The high low for the day, 12,844, 12,491. So we're trading within those bounds and down, and it's possible we're going to see the market attempt to get through that 12,756 level and print up toward the R1 number, 12,851 today. I don't think we'll see R2, but we could at 12,961. There will be a slight bias to the upside. The PPMs are trying to turn up. The key pivot number on the downside will be that 12,735. As we look at the action overnight, we have printed down to 12,646. S1 is 12,539, R1 12,694. So we printed just above R1. R2 is 12,781. We could see that number as being an extreme. I don't think we'll see an R3 number, which would be 12,868, but S1 is likely to be the low. R2, possibly R3 on the upside. I do expect. Now, the key pivot number on the downside will be that 12,539. Take that out, we'll go back to 12,452, which will ultimately start to suggest that we could challenge the lows that we saw yesterday. So this pattern is going to continue to be sloppy as the bias in the market will continue to be toward the Russell and the mid-cap as we go forward. Just a very quick review of the spreads. There's a number of things. I went through a lot of detail in the live stream, so make sure you go back and watch that section. The video's all been labeled where I was talking about different things, but this IWM versus the PSQ, this is long the Russell, basically the small caps, versus short the NASDAQ. And this spread has really been working. I've been talking about this for a number of months now, that this was the trade to put on, and this is really just screaming. You see also the Russell versus the NASDAQ on the right-hand side in the corner, and then the MDY, which is the mid-cap versus the NASDAQ, also doing quite well. The market, the ratio that's not doing as well is the S&P versus the NASDAQ. It's actually had a slight bias over the last several days, but there's a lot of the NASDAQ stocks at the top end of the S&P, so we're not seeing that overperformance that we're seeing in the other indices. The final market that I'll cover tonight is gold. We did see a sharp reversal over the past several sessions in gold. I've been talking about a move towards the 0.618 retracement level at the 1968 level. Now, yesterday we printed up to the 1962 level, and that was where the market reversed from, and we traded all the way back to the 10-period moving average around the 1900 level. It was at 1899. We saw a low yesterday of 1902, and now we're seeing some retracement. We're probably going to get an inside day, and I believe this upward sloping 10-period moving average is going to be the key support here at 1900, and that should hold for the next couple of days. We'll probably trade between 1900 and 1928. We could trade back toward the 1949 level. One of the other things on this chart to look at is that the PPMs are all turning up, and I've been talking about a major bottom forming in gold. I still believe that's the case. There's more evidence on this as we look at the weekly chart. A weekly chart did trade up to above the RXT number. RXT is 1950. We traded up to 1962. We traded back in the range. We're back around that 21-week moving average around 1905. I think, as I just mentioned in the daily analysis, we should hold around this level, possibly see this thing move back towards a 1928 level, maybe as high as 1940 as we come into the close on Friday. This will complete the video for tonight. We'll talk to you tomorrow night.